Hello and welcome to our podcast Tech Connect. I'm Kesha, Senior Marketing Manager at Signet.
Today's topic is tax credits, and we have been in a conversations with a lot of CFOs lately, as well as tax heads, some professionals, accounting practitioners, and many more. So these are some burning questions which I thought we bounce it off you and have your views on it. So the first one is, globally, if you look at the tax refunds, most of the data that comes to you is in the form of a summary as a government. Now, in such cases, how do we actually claim refunds as an organization?
So, Kesha, first and foremost, it all boils down to data governance. And let me be very honest. I was with a kind of a tax consultant yesterday. One of his client was getting raided. I was sitting with another person in the flight, and he is a contractor doing oil pipelines globally. Absolutely kind of messed up in terms of his taking his tax refunds. And before anything, whether we are into a X country or a Y country, we are in India, we are in UAE, or we are in Europe, the data governance becomes the most critical point. First and foremost, Excels have to be out of any which way. If you are going to maintain the data into Excel, it's not going to work anyway. Whatever kind of input invoices are coming in, it has to be properly either into accounting package or in a ERP or in a tax compliance package. Either which way, it has to be properly done. Whatever kind of globally the countries are talking about making tax digital or having a digital link between your source data to the data that you push into the government authorities, a genuine data link has to be established and not any kind of a data link which is based out of Excels or any other things. So unless and until this tax governance comes into play, whatever way you take input tax credit, it is always going to be in a question mark. You are never going to be sure. And 5 years back or 10 years back, one of your chartered accountants or one of your accountants would have done an entry in a specific name, and after how much, like 5 years, how would you really know what the transaction was?
Right.
So the most important key is data governance, and unless and until you fix the data governance issues, nothing is going to come. The CFOs, the tax heads, the kind of CEOs are skeptical in terms of investing into tax technology, and I think they have to change. Unless and until they bring in this data governance, they bring in tax technology, they are going to have many major challenges down the line. This is the simplest answer which I can give.
Yes, and like you always say, it has to reside in a single source of truth.
Absolutely.
So as a CFO, like you rightly mentioned, we have to invest in a technology solution. Otherwise, you will not be able to provide the data which is required for governance. So my next question is, as a CFO, a person would like to know that what are the incremental costs of implementing such a tech solution versus what is the savings in terms of the cost of funds for withholding the payments? Because, tax refund eventually is linked to your accounts payable as well. If the other party pays or not, wherever in regions like India, where actually it is very much stringent, it is dependent on the counterparty. And similarly, you also will have to at some point protect your tax refund. So in such cases, what is the cost savings there?
I would say whether should we look at it at cost saving or we should not look at it from the angle of the cost saving. And when we talk about implementing technology and cost saving, it's a no-brainer. Implementing technology is going to be at least 100x more important in terms of your cost saving.
Mm-hmm.
So if you want to look at from the cost saving purpose, there is no-brainer. The amount of manpower and what the CFOs or the tax heads look at it, how much amount of by implementing technology, how much amount of manpower am I saving today? And my clear submission to them and a simplest request to them is very simple. Please don't look at it what you are saving today. What is your tax litigation journey? It is 5 years, 7 years, 12 years. And what is the amount of time that you are going to incrementally save onto it? Please look at it. Because today, to find the same data, if it is taking 1 hour, 10 years down the line to get the same data is going to take 1 month.
Yeah.
And 1 month at the cost of 10 years down the line cost. So there is no comparison. There is no brainer into it. You need to deploy technology to save it. Now, when we come into it, okay, whether do we have an option of not deploying the technology?
Yes.
Today, the conversations are that we don't have an option now.
Yes.
Whatever we have done for the 5 years is biting us today. The amount of notices that are coming in, we are not able to kind of reply to it. And I'll give you a very interesting example. Forget India. If I take about UAE, we have been trying to kind of work with multiple clients in UAE for last 5 years, 4 years, since VAT has come in. And they say we don't need technology. Means we are comfortable, our ERP solutions are able to give the data whatever we require. 4 years down the line, the audit notices have come in. They don't have data.
Yes.
Now they want to kind of retrospectively generate the data what they have submitted to the tax authorities. How it's going to happen? Take India's example. People took ITC credits as if 20% extra, as if a government is giving you a free grant of extra 20%.
Yes.
And people have claimed the ITC, provisional ITC. Now today, they want to reconcile the data for last 5 years. There is no data available to reconcile. How you are going to do it? I don't know. And unless and until you wake up today and think about the future and also retrospectively take care of the past, before the actual tax authorities people come to you, you are not going to make a difference.
Right.
So I can stay in my glass house, and I met few clients in last few weeks who said we don't have any problems. We don't have any issues. We are perfectly solved. We have everything in order. But when you talk to the people down under them, the amount of notices that they are kind of catering to is unimaginable. So we can stay in our glass house, but the stones are going to come in form of notices. Stones are going to be thrown to us in forms of audits, and the governance challenges are going to come in. Lot of people are going to lose their jobs because they have not done the things right. And it's time to change. It's time to prepare for it and time to be ready for it.
So tech is the only answer.
Tech with governance is the only answer. And I will kind of give you a very simple example. That should tech be used as an enabler over here, or should tech be used as a driver? And if you ask me, for last 5 years, I was also very skeptical into this area, whether tech should be an enabler or a tech should be a driver. Today, after this 5.5, 6 years of journey into tech technology, I can say without tech being a driver, nothing is going to work. The tech professionals have to be enabler for the tech to be a driver. And that is my answer to the CFOs when I talk to them.
Right. So the next question is that in the fear of audits, in the fear of raids, and in the fear of litigation, most of the people tend to pay the taxes even if the counterparty has not yet complied. So in such cases, what do you suggest? How are people going to eventually ensure that these non-compliant vendors are actually making or actually complying, how to recover the taxes from them?
So I'll give you a very simple example. I was sitting with one of our tax friends, a very good CA, and one of his relatives got a notice from the GST department. People came and sat over there, and it was kind of a bogus billing issue. And the guy had bought some invoices, some material from that particular party. He was so scared, he straight away paid the penalties and everything and accepted to it. One should never do in this fashion. In such a cases, first you talk to your chartered accountant, take their help, take the litigation lawyer's help, actually identify what grounds you are, because in most of the cases you would have done nothing wrong. And that is the reason, because of few kind of a bad apples into the entire kind of a basket, you should not react in that fashion. So don't lose your heart, don't lose your head. Take professional help the right way, take the right advice, and then deal with the situation. So that is something which is very important into the process going further. But to answering your question, we have enough inputs available, like we have our own GRC score, we have different types of mechanism by which we can identify whether the vendor is compliant or non-compliant. We can do the assessment of the vendor. So working onto those areas, prima facie and in advance, will actually help what is going to happen.
Right.
Even today, see, if I know of all the vendors from whom I have purchased over last 5 years, and if I actually check out their compliance scores, then I will know who have been defaulters,
Definitely.
what is that. I can even proactively plan the reversals today instead of waiting for somebody to come and kind of really
Okay.
harass me.
Correct.
So, being prepared onto it, doing it in advance is far more important than anything else. So, I would really request people, whatever has happened. It's a new law, it's a new technology, it's a new way of doing business, but we need to learn from it and be proactive about it instead of being reactive about it.
So the next question, which has come from a lot of prospective professionals, is how process from invoice booking to claiming the ITC and releasing the payments can be streamlined to realize the synergies, to save costs, to ensure that the working capital is at the optimum.
Kesha, you are trying to sell Signet's technologies.
But this is the question from the market. So,
Yes, I understand that. But I think the digitization of the entire process is kind of very, very critical. And I'm very happy that Signet is helping so many clients across India and overseas in terms of digitization. But this is a kind of a discussion I have had with our own CFO and many other CFOs,
Right.
that we need to remove data entry from the organization 100%. And people, when I say this, people kind of literally laugh at me and say, you are asking us to climb Mount Everest. And my answer is again repeatedly the same. I am asking you to climb Mount Everest. If we kind of go into that journey, at least we will reach the base camp.
Right.
And that is something, the objective we should be having into it. So digitization, taking the data, the invoice generated data into a digital format, using OCR based IDP on top of it, ensuring that the digital entry happens into your accounting package and financial accounting solutions or the ERPs, ensuring that that complete digital invoice processing is done. You identify the defaulters into the process, either withhold the tax for the defaulters or raise the debit notes for it automatically. Ensure that your tax compliance data and your financial data are in sync and are reconciled with each other. If you kind of take care of this particular thing and take the input tax credit based on that, you will not have any governance issues in future. And what we have been taught, that we make life more simpler for the generation below us.
Yeah.
If I have to take care of my kids, I would really want to make life simpler for them. I don't want them to go through the same hardships that I have gone through. And similar is a reason for all the tax heads or the CFOs, that we don't want to make life difficult for people 10 years down the line or 5 years down the line. Let's try and make it easier. Let's ensure that things are reconciled and in place. And digitization helps in doing it. Why not deploy it? And it costs nothing compared to the huge turnovers that the companies have today.
Right. Thank you for your time. I think we'll be able to have these conversations for hours and hours.
Yeah.
But maybe we'll catch up with another podcast, picking up another topics. The next one probably would be e-invoicing, so we'll be ready with that. And hope to have the third podcast soon.
Sure. Thank you so much.
Thank
Thanks
you.
for this conversation.